What's going on, everybody? This is Myke at the Day Trading Musician. Today we had a good little green day. There were quite a few opportunities, surprisingly, to make money today. I only ended up taking one trade, but the lesson of today was you have to commit to your trading plan, and you have to believe in yourself. You have to trust the things that trust your time in the market. That's what I take away from today for myself. You're not going to see a lot of what transpired in terms of these supply and resistance levels, which I should have taken screenshots, but I didn't. But you can kind of see where they would have been as the day went on. There's a supply level here, resistance level here. At one point there was a supply level here while the same resistance level was here, and then that became the new supply, and that was the new resistance. And that trade was like that. If you did supply and resistance today based on these, you would have just rode it up and down, and you would have made a lot of money today. But let me tell you about how the trade went that I ended up getting in. I was in SPY 450 puts, 0 DTEs. I played the swing arm today instead of the supply demand level. What I was looking for was the reversal right here. I jumped into a put right here. I know it looks like, well, Myke, why would you jump into a put right here if the candle went all the way up there? It was not there whenever I got in. It was a little bit of a wild ride for well, I think I was in this trade for the better part of, maybe close, just 40 minutes, 40 to 50 minutes. I got in right here. And the whole philosophy of the swing arm is that if it goes here, you average down. Our supply level was topped out right here, and the bottom of it was right here. So if you can imagine, if you want to just try to recreate this, this is what our supply looked like today. Or our resistance, excuse me. I got in here. Could have got about 9 cents on this drop. Chose, again, not to do that. As you can see, I got in at 51. Oh, maybe could have gotten 10 cents here. At the time, I was going for a little bit more. You can call it greed. It's not greed. If there's anything I've learned the past couple days, when you're trying to execute a trade, you want to have a target. That's what I did not have today. If I had a target, I would have made a lot more money. I'm on the hunt for figuring out a good way to come up with target levels. I know there's a couple different methods that different people have. I need to find what works for me, which is usually a hodgepodge of other people's ideas. Anyway, took the put here. As you can see, this next candle, we came down a little bit. It teased me, thinking we were going to go down, came back up. I did not actually average down. Excuse me. I did not average down until this candle, because I was like, well, if we're going to go up, I need my average point to be a little bit lower. So it's 51 here, and then I got in at 38 here, 38 cents on this candle. Maybe it was that candle. Maybe it was somewhere in between here. I don't know why it doesn't line up all the time. So basically, my average at that point was 44. We bounced off this twice, and I basically was a little early. I basically was early to this trade. Bounced off this level twice. I didn't have a limit order in, or else I would have gotten 53 cents from 44. That's so I had mine at like 53. I had 2 contracts at this point, right? So I did not get out. It was a lot of pushing and pulling right here. And one of the things I watch a lot is this up here, the volume. It's basically volume pressure. It's the same thing down here, but this goes by candle. This is overall for the day. We come down, we're pushing and pulling, and I say to myself, you know what? Mind you, the supply level is down in here, I believe. I think it was something like this. I think that's where the supply level was. So you can see we had a ways to go. But for me, I got scared because I was in my trade early, and then when it finally started to break my way, I was like, well, let me just take my little profit. So I sold at 49. I had 2 contracts, 49. 44 to 49. Basically $10. If I had held a little bit longer, because we were already, the signs were showing that we were bouncing off this, and the signs showed, I had set this up just today. I know it looks crazy. I don't expect anybody to do this. But this was just looking at a SPY with supply and demand levels on 6 different charts, just for Confluence, just to see if it would give me a little bit more confirmation. Not that I really need it anymore, but I should have stayed in my trade, because I rode this all the way, basically for 40 minutes. I rode this, and something I've been saying to a friend of mine that I trade with is, like, if I'm gonna ride out a trade that's going against me, why shouldn't I ride it out when it's going for me? So that's something that I'm going to be working on and challenging myself to do, and hopefully have some good results to share with you guys here in the near future. So I exited early, and I'll be darned if we didn't go, at least on that run alone. I would have been more than happy with that right there. If doubling what I have from 44 to 88, 2 contracts. I mean, that would have been beyond a great day. That would have been incredible. It wouldn't have been the most I've ever made in a trade. The most I ever made in a trade was on a Boeing play early on in my trading career. Like the first 6 months, it made me feel like I knew what I was doing. I got so lucky on like 7 contracts on Boeing puts, and I made like $600, and I thought I knew what I was doing. Gave that money right back within the next 3 days. So we've all got those stories. I would say some of the trades lately have been my better trades because of the intentionality behind them. So that's the new goal, is to set targets for my exits. And instead of just worrying about, instead of just focusing on holding through the bad to get to the good, I need to be able to focus on holding through the good to get to the better. And then also, based on the supply and resistance levels, here's some really good trades you could have taken. Actually, I'm going to show you. I know why I circled this now. So that candle right there is where you should have where you would have entered out of the supply zone. Let's just for the sake of the video. The supply zone right there. There's your entry. Write it out through the resistance. There's another level. There's another line. Let me see if it's on here. See these white lines? Those are basically confirmation of the trade really going your way. So once you break through that, it's kind of like, okay, you can hold and move your stop loss. Manual stop loss is really the goal with this. But you don't want to have a stop loss so tight when your trade gets started. This is what used to happen to me, and it was a really big killer, and it cost me a lot of trades. You don't want to have your stop loss so tight when your trade starts that the smallest moves stop you out. You're going to lose money. There's just no ifs, ands, or buts about it. I ask tons of people all the time, where do you put your stop loss? Honestly, the best advice I was ever given was put your stop loss at 50%. The guy told me, he said, I know it's crazy, but he said I have an 83% win rate moving my stops to 50% because it gives your trades time to breathe. And then as they come up, put them at realistic levels. So like my goal is 10. So as the trade's going up, if I'm already at 20 above, I could put it there at 10. Or if my trade's hovering at 10, I could at least put it at break even, so I don't have to worry about, the trade going south on me at that point. If I was wrong, I was wrong. You have to find ways to minimize your losses. That's the name of this game. Capitalize on your wins, minimize your losses. So there was an entry point there. You could have done the same thing here. The way I averaged down, I basically entered somewhere in here. There's another entry point for a small one. When it dipped down here, let me see if I can, I don't know if this, it sure does, look at there. This was another supply level, and the next resistance level was here. This chart's all messy. I'm going to erase these. But like right there, you could have played it there, taken your little profit. That's why that manual stop loss is key. Let it come back down, bounce out of this range. You can see it hit the bottom right here and ride it back up. I mean, that was the theme today, supply and demand. So with that, take that information, do something good with it. I hope it helps. If you guys have questions, feel free to write them in the comments. Please subscribe, like the video, share it with somebody if you think it's going to help them. And I will catch you guys in the next video. All right.